So, hi guys, welcome back after the break. So, before the break, I asked you to solve problem number 5. Let me see if the students are comfortable with this. So, Priyadarshini, the speaker of the day, did you do
Yes,
this
sir.
problem?
Yes, sir.
Easy problem or difficult problem?
Easy one, sir.
Okay, so how did you do that?
First, I took the financial leverage, and
Excellent.
then
Whenever this is I don't say a rule, but it is a technique. Okay, it is like a memory tip. It is a technique. Whenever interest is given, financial leverage is given, your problem starts there. I mean, solving the problem starts there. It is not the problem starts there. You're solving the problem starts there. So what you need to do is financial leverage is equal to 3. EBIT by EBT is 3. Then you'll expand EBT to be EBIT minus interest. Then it becomes financial leverage is equal to EBIT divided by EBIT minus interest. So you have financial leverage 3 and you have interest. Okay. So your solving problem starts there. Very good. After that, what did you get? You got EBIT and EBT?
yes, sir, I got EBIT.
Very good.
Then I calculated the contribution with the operating leverage part.
Very good.
Then with the format, I calculated EBT and then fixed cost, EBIT, etc.
Super. Very good. So you found the answers. Did you check the answers? Company A, you got straight. We'll go to the pro forma. Then you'll understand. So these are the numbers you got. Everybody, please confirm. These are the numbers you got.
Yes, sir.
No confusion in that. Okay. Very good. So based on leverage, they have given capacity of company B to meet interest liability is better. They have calculated EBIT by interest ratio. By chance, do you remember what is this EBIT by interest ratio? What is this? This is a ratio. What is the name of the ratio? It is called interest coverage ratio. So they have calculated interest coverage ratio and they said B's interest coverage ratio, which is the ability to pay interest, is higher. Okay, so if these two companies A and B goes to a bank and applies for a loan, banker will prefer to give loan first to B because their ability to pay interest is higher. So they are earning, if they need to pay 1 lakh interest, they are earning 2 times. But when it comes to company A, if they need to pay 20,000, they are earning only 30,000. That means only 1.5 times more they are earning. Here they are earning 2 times. Then company B has the least financial risk. Okay, so they might have compared financial leverage, combined leverage. That's all. That's all. Summary. Oh my God, that means the chapter is over. And then they have given some MCQs, they have given some practical questions, but we are not stopping learning here. There are so many other questions in our material. Though according to ICI study material, with this 5, it is over. We have more than 20 questions here, okay? So 14, 16, 17, 18, 19, 20, 20 problems we have, and then assignment problems we have. Let us see, randomly probably will not solve each and every question, but we'll see randomly few problems I'll teach you to give the confidence that yes, I can do this. Okay, other things I'll give you as an assignment. If you are able to solve that, very good. If you are unable to solve it, don't worry, I'll give you a solution. I'll give you a printout, PDF of a solution for that. So problem number 20, can we start here? Problem number 20. So can you read this, please?
Yes, sir. Calculate the operating leverage, financial leverage, and combined leverage from the following data under situation 1 and 2 and financial plan A and B. Installed capacity is 4,000 units. Annual production and sales is 75% of the capacity. Selling price is 30 per unit. Variable cost is 15 per unit. Fixed cost under situation 1 is 15,000, under situation 2 is 20,000. Capital structure, equity for financial plan A is 10,000 and for plan B it's 15,000. Debt rate of interest at 20% for plan A is 10,000 and for plan B 15,000. So the
Yeah.
total for plan A is 20 and for plan B it's 20,000.
Okay. Okay. So what they are asking you to calculate operating leverage, financial leverage, combined leverage. There are two situations and two financial plans. Two situations and two financial plans. So how to solve this problem? Easy problem. Again, once again, simple problem. So look here. Particulars. We'll take situation 1 under that financial plan 1 and financial plan 2. Okay. Situation 1 under that financial plan 1 and financial plan. And situation 2 under that again financial plan 1 and financial plan 2. So this is how we solve the problem. Okay. This is our solution pro forma. Okay. Now we'll take sales less variable cost, contribution less fixed cost, EBIT less interest, EBT. Okay. So that's all. Tax rate is not given. So up to this, we have to solve it. So sales, can you tell me what is the sales? Installed capacity 4,000 units, they said. In that production and sales is 75%. So can I say 4,000 into 75% is 3,000 units? Selling price is 30. 3,000 into 30 is 90,000. Is it so? Hello.
Yes.
So in all the cases, your sales is 90,000. Okay. Then variable cost. Variable cost 15 rupees. So in all the cases, variable cost is 15 rupees, which is half of the above 45,000 in all the situations. Then contribution, obviously, it is this minus this. So 45,000 in all the situations. Fixed cost. Fixed cost. Under situation 1, it is 15,000. Again 15,000. Under situation 2, it is 20,000. 20,000. So EBIT is obviously this minus this. Okay, less interest. They have given, look here, in financial plan A, here interest is 10,000. Financial plan A, that means 1 financial plan. We'll put A and B as given in question, and doesn't make any difference, same. So in financial plan A, they have given 10,000. No, debt is 10,000. Interest rate is 20%. So can you calculate and tell me interest, please? Hello. Hello.
2,000.
Very good. So financial plan A, 2,000. I'll write 2,000 here. Please be careful. In financial plan A, 2,000. In financial plan B, 5,000 into 20%. How much it is?
1,000, sir.
Yes. So this minus this. This is EBT. So we'll calculate operating leverage, financial leverage, combined leverage. That's all. Operating leverage is equal to contribution by EBIT. Ta-da! Financial leverage is EBIT by EBT. Ta-da! Then combined leverage is equal to this into this. Ta-da! And that is all. The problem is over, ladies and gentlemen. So Priyadarshini, we have two options. We can waste time in copying this answer, or we can go to next question and you'll do this question later. What shall we do?
We'll go to the next one, sir.
Good. 20th question is over. So shall we do 19?
Yes, sir.
Shall we do question number 19? Ta-dan, ta-dan, ta-dan. Read.
A company had the following balance sheet as on 31st March 2020. Liability in crores and assets in crores. Equity share capital is 5 crore, share of 10 each. Reserves and surplus is 1 crore. 15% debenture is 10 crore and the current liability is 4 crore. On asset side, it's fixed asset, that too net is 12.5 crore. Current assets is 7.5 crore. Total is 20 crore. The additional information.
Fixed assets net means net block after depreciation. So fixed assets net at 12.5. Okay. Obviously, fixed assets net only will be there. Okay, in the balance sheet. Okay. Then
additional information given is as under fixed cost per annum Excluding
Excluding interest, it must be.
interest is 4 crore. Variable operating cost ratio is 65%. Total asset turnover ratio is 2.5. Required calculate the following and
No,
comment.
wait. I think there should be one more line here. I don't know. There is one more line. Yes. Income tax rate 30%.
Yes, sir.
Okay. So income tax rate 30%. Okay. So what is total asset turnover ratio? Can you tell me? What is the formula? I'm asking you formula of asset turnover ratio. Anyone?
Turnover by total asset.
Excellent. So can I say asset turnover ratio is equal to turnover by total assets? Okay, they said total asset turnover ratio is 2.5. So 2.5 is equal to what is turnover? We do not know. Divided by total assets, we know 20 crores. Given in the question, balance sheet. So can you tell me therefore turnover is equal to
50 crore.
50 crores. So now turnover is available. Variable operating cost ratio 65%. If you subtract contribution, you will get fixed cost other than interest 4 crores. If you subtract, you will get EBIT. 15% debentures 10 crores. So interest is 1.5 crore. You will get EBT. Tax rate is 30%. You will get EAT. And then you need to calculate EPS, operating leverage, financial leverage, combined leverage. Simple problem. So first, this is the working notes. Okay. After that, we'll prepare like this. So, sales bolo how much, ma?
50, sir. 50
50
crore.
crores. Okay. Variable cost? They said
Hmm.
65%, no?
Yes, sir.
This into 65%. Fixed cost how much? 4 crores.
4.
So EBIT is 13.5. Now tell me interest how much? 15% on 10.
1.5.
1.5. No. Hello, wait. We shouldn't change this. We should change this. Is equal to how much more? 4, 1.5. Then EBT is 12. Operating leverage, financial leverage, combined leverage already calculated. We can calculate EPS also. EPS is equal to PAT divided by number of shares. So what is PAT here? We calculated PAT. Oh, tax is also given. So wait. What we do is we'll write it here. And EBIT less tax. Tax rate how much, ma?
So questions.
30%.
30%.
This into 0.3. So profits after tax.
8.4.
Okay. Then EPS is equal to PAT divided by N. What is number of shares? Number of shares given 50 lakhs. Correct? Huh?
Yes, sir.
Can I say it is 0.5 because we are solving problem in crores? When you are
Yes, sir.
solving problem in crores, 50 lakhs will become 0.5. So EPS is equal to PAT divided by N. 16.8. That is the answer, ladies and gentlemen. Easy question, okay? When you use that total asset turnover ratio formula, you will calculate turnover. You'll turnover. After that, it is LKG problem. All these are ICI examination problems. Each and every question, whatever is there in our material, majority of them are ICI examination problems. And you can check here also in ICI study material. At the end, these are there, no? These are also all are very, simple problems. Company A, company B, margin of safety they have given, interest they have given, profit volume ratio they have given, little bit of, costing is also there in this. Financial leverage 4.3, tax rate 45%. And do you remember the rule I told you? Interest is given, financial leverage is given, start solving it there. That's all. Okay, they have given so many questions. This is the problem we solved now, isn't it? Is this the problem we solved now?
Yes, sir.
Seventh question. Is this the problem we solved? Previous problem.
Yes, sir.
So 7 and 8. So this problem also similar. We have seen output, selling price they have given, variable cost they have given, fixed cost they have given, capital structure they have given. Okay, little lengthy, but I do not find anything difficult in this. So again, this is the problem where they have given operating leverage, combined leverage, and you need to do reverse working. You need to calculate financial leverage. Please be careful with this problem. This is little interesting problem. Note problem number 10 as interesting and important. Problem number 11, this is one basic problem. So can you read this question once? We'll see problem number 11, because problem number 11, unless I explain, I don't think you'll be able to catch. Once you catch the meaning of it, it will be very easy. Just read the problem. This is also a previously asked question.
Yes, sir. You are given the following information of 5 firms of the same industry. Name of the firm, change in revenue, change in operating income, change in earning per share. For firm M, change in revenue is 28%, change in operating income is 26, and change in earning per share is 32%. For firm N, it's 27% change in revenue and 34 and 26%. For firm P, it's 25, 38, and 23%. For firm Q, it's 23, 43, and 27%. For firm R, it's 25, 40, and 28%. You're required to calculate for all firms degree of operating leverage and degree of combined leverage.
Can you tell me how to calculate degree of operating leverage? What is the formula?
Contribution by EBIT or percentage change in EBIT by percentage change in sales.
So this column is percentage change in EBIT.
Yes, sir.
This column is percentage change in sales.
Yes, sir.
So this divided by this obviously will give you operating leverage.
Yes, sir.
Similarly, when you are calculating degree of combined leverage, what is the formula? Percentage changes in EPS divided by revenue. So this is EPS.
Yes, sir.
This is revenue. So 32 divided by 28. That will give you degree of combined leverage. Khatam. The answer is over. Okay. So can you solve this and tell me answer? Or you want me to do?
We'll solve, sir.
Okay, you'll solve it. Okay, then that's it. These list of questions are also over. There are few more questions which we have not solved, but I'm sure you'll be able to solve it easily. Probably one more problem. If it is really interesting, we'll see one more problem. This is same question. So don't you think this is the similar model just now we calculated? Copy paste.
Yes, sir.
So question number 19 and question number 18 are copy paste questions. Then normal question. All these are taken from ICI, at the end only. So I just want to teach one more problem. Problem number 11 and 10. Okay, so this problem also we have seen just now, change in revenue and change in operating income. Don't worry about this beta and all. This was actually a CA final problem. So then they have given this beta. For CA intermediate students, what they have done is they deleted this beta column and they have given change in EPS. Then that has become your previous question we have seen, no? 5 companies and all, that is the one. So question number 10, if you look at it, interest is given, financial leverage is given. We'll start problem like this. Previously in the class, we have solved the same problem with 2 companies. Now it is 3 companies. So what is the hint? Prepare income statement, prepare the pro forma. After that, workings. Start with company A, fill the numbers. Start with company B, fill the numbers. Then continue with company C, fill the numbers. That's it. And that fixed cost, you'll get as a balancing figure. Problem number 11. This will be the last problem in this chapter. And this will be the last problem in today's discussion. Can you read this?
Yes, sir. Problem number 11. Consider the following information for Omega Limited. Particulars and rupees. Earning before interest and tax, that is EBIT, is 15,750. Earnings before tax is 7,000. Fixed operating cost is 1,575. You are required to calculate the percentage change in earning per share if the sale increased by 5%.
How to solve this problem? This is given in CA final originally. After that, this is given in CA intermediate also. Because I'll tell you one logic. When I say this is CA final problem, half the students will be scared, Pawan sir, why are you teaching final level problems to us? This is half the category. Remaining half students will think, final problem, this such a simple problem in final. The secret is, before 2003 in CA curriculum, at intermediate level, FM paper was not there. Only costing is there. Some part of management accounting is there, like that standard costing, budgetary control, that is, management accounting part. So in costing, they have given costing for 100 marks. There is no FM paper. So in CA final, there is FM paper with our CA intermediate syllabus. Whatever CA intermediate syllabus now is, that was in final before 2003. After that, what happened in the new syllabus that time, they shifted the whole financial management to CA intermediate, and at final level, they started a new subject called MAFA. MAFA means management accounting and financial analysis. Management accounting and financial analysis. Subsequently, that MAFA paper is converted into SFM, strategic financial management. So when you look at 2004, 5, 6, 7, 8, this 4-5 years, if you look at the practice manual, what we call, now we do not have practice manual. Previously, we used to have practice manual. ICA used to give 2 books. One is called study material, one is called practice manual. Practice manual is nothing but a compendium of previous year questions and answers. Chapter wise sorted. It is not question paper wise, it is chapter wise sorted. That is actually a very good book for practice. All these problems are taken from there only. So 2004, 5, 6, 7, there are no previous examination question papers, no. So what ICI does, whole practice manual of CA final, they have given to CA intermediate, same copy and paste, because its syllabus is same now. That is the reason if a faculty says this is CA final problem, that was long back, 20 years back final problem. Now it is intermediate level only. Okay, you don't need to take it that why unnecessarily all these problems are being discussed. This is your level, and this problem is given in CA intermediate exam also. Point number 1. Point number 2. If any faculty, including me, or it could be someone else, if they are teaching some additional problems which are not there in ICI study material, especially if you feel the concept is good, the model is new, or the level of difficulty it is little above ICI study material, don't be scared, appreciate it. Because many faculty, they'll just teach ICI study material and that's it. For final level, if you do that, it is still okay. Why? Because the syllabus volume is huge. For example, CA final FR, when I take up financial reporting batch, one batch will take around 240 hours, 250 hours, 220 hours to complete. So in that situation, we will be able to deal only with ICI study material with few RTPs. That is the end of the class. But at CA intermediate level, what we do is, because the syllabus is less, your FM syllabus is not huge. So what we do is, instead of, in addition to ICI study material, we'll solve so many other problems also. Even if you look at investment decisions, we have done the same. Any chapter you take, if ICI study material has 10 or 15 questions, we'll solve at least 10 questions extra. So don't feel burdened. Don't feel like, Pavan sir, unnecessarily you're putting so much on us. No, this is good for you. When you write the exam, you'll realize the value. Sometimes students asked me, in ICI study material, this model is not there. Why are you giving this model to us? Simple. There is no rule that the examination question will come only from study material model. No. In the past, if you look at it, all these questions are given. Then why they are not in ICI study material, we do not know. But if you look at RTPs and MTPs, all these models are covered again. In ICI study material, it might not be there, but if you look at RTPs and MTPs, all these models are covered. So please don't feel like, you're overburdened. This is good for you. Okay. Now, coming to solve this, what is the requirement? You're required to calculate percentage change in EPS percentage change in sales. Can you tell me what is this ratio?
Combined.
Combined leverage. Exactly. So combined leverage, they are asking you what is combined leverage, correct? They're asking you what is combined leverage. This is what they're asking, correct? Now, how combined leverage can be calculated? Combined leverage is equal to, do we know contribution by EBIT? No, contribution by EBT. Or that can be percentage change in EPS by percentage change in sales. Correct? These are two formulae for combined leverage. Do you agree with me?
Yes, sir.
Okay. Now, contribution less fixed cost is EBIT. Do you agree with me? Sales minus variable cost is contribution. Contribution minus fixed cost is EBIT. So do you agree with me in this?
Yes, sir.
So less interest is EBT. Do you agree with me?
Yes, sir.
Now, they have given EBIT 15,750. I'm just filling the numbers. And then they have given fixed operating cost 1575. Fixed operating cost 1575. And they have given earnings before tax 7,000. This is 7,000. Okay. Now, this is not there. But I know that x minus 1575 is equal to 15,750. Therefore, x is equal to, can I say reverse working, add both the numbers? Obviously. Hello,
Yes, sir.
is it clear? Now,
Yes, sir.
interest you can say this minus this, but doesn't make any difference. We don't need this interest line. If you solve, it is okay. If you do not solve also, it is okay. You can simply write one more line also. Instead of preparing this particular statement, you can put a single line stating that contribution is equal to EBIT plus fixed cost. This is also one formula. You might have learned in costing also. So contribution is equal to EBIT they have given 15,750 in the question. Fixed cost they have given 1575 in the question. Add both. So contribution is 17,325. Now, combined leverage is equal to, we know contribution by EBIT. So calculate contribution how much? This one divided by EBIT how much? Sorry, EBT. This one. So can I say 2.475? Now, what they are asking, if sales increases by 5%, put this 2.475 in this formula now. Okay, so if sales increases by 5%, comma, EPS increases by 5 into 2.475 times. That is equal to, multiply and tell me.
It's 12.375%.
That's all, ladies and gentlemen. The problem is over. Chapter is over. Today's class is also over. See you tomorrow with a new chapter. Are we done for the day? Any doubts before we log off? Ma, Priyadarshini and other students, any doubts?